Okay, guys, so this will be the first live session where we have one of our educators sharing their own personal strategy. So this is a notepad moment for you guys. Make sure to go back to the video, look at the timestamps that I'm going to include in there, and rewrite your notes in your own words so that it works for you. Without further ado, we're going to get Tyler on here to share his strategy, and I'm going to be moderating in the comment section. We'll open up the meeting at the end, the last 10-15 minutes, to answer any questions in the chat. Other than that, sit back, write down your notes, and we'll see you at the end.
All right, so my strategy is based off of hidden divergence. Everything that I take, everything that I do, it's based on this. All the Confluence is all based off this. So first of all, before I even get into it, I'm just gonna share my chart settings just so you can be on the same page. It's fairly simple. There's three SMAs: the 50, which is the red, 200, which is the green, and the 800, which is the blue here. Let me just find this here. These are the settings. These are just the colors I use. And that's the inputs. You can pause and copy these. And on the bottom here, I have the RSI, TDI. Let me pick up the settings. Those are the inputs. You can pause and copy. Style. That's what I do here. Make sure to copy these exactly just so you can be on the same exact page. And how to add these, you just go to indicators and just search these names, the 3SMA plus bowl and the TDI, which is right here. This one and this one. That's out of the way. So like I said, this is based off of hidden divergence. The entire trade is, all the trades I take are. So what is in hidden divergence? I already have it pulled up here. Let's look at bullish and bearish. A bullish hidden divergence is when you have a higher, there's a low here and there's a higher low, right? But then when you compare that to the TDI down here, it's a low here, the same low, but it makes a lower low. See how they're going opposite directions? An easy way for me to memorize this, or like when you first check this out, is I imagine a Pac-Man mouth, right? It's an easy way to envision it. If you close it, it's a Pac-Man mouth, you know, with his mouth open. That's bullish. You just have a higher low on price action, but then the TDI is opposite. Right next to it, we have bearish hidden divergence, right? Bearish hidden divergence, we have a lower high this time. We're looking at the highs, right? Kind of like a resistance kind of thing. We have a lower high on price action and then simply the opposite on the TDI, right? So what this shows, obviously bullish hidden divergence, Pac-Man mouth, right? That's obviously a bullish indication. You know, you're looking for buys, right? And the exact opposite here. When we're looking at the highs in this situation, it's bearish hidden divergence because it's a lower high, right? So we're looking for sells in this instance. So you can review this. It's literally that simple. Just get that in your head. Bullish Pac-Man math, and then with the lows, bearish, lower high, opposite on the TDI. So now, how do I use this to actually trade, right? So I use hidden divergence paired along the 50 SMA to go into, or like, you know, see if there's a point of interest for my trades. And it's funny because in both of these, I just realized both of these, there's actually a perfect example of this. So when we have, let's look at the bullish, right? This is how I use the 50 SMA. I have a low here, and then there's a higher low, right? We have the hidden divergence here, bullish hidden divergence, and it's at the 50 SMA. This is where I start, like there's something here for me to look more into, right? So that's what I do right here. I look at the pairing of the hidden divergence and the 50 SMA. That's my trigger for like, okay, let me look into this. Let me see if there's something else here. Same instance over here. We have the lower high, right? But the TDI is showing a higher high, hidden divergence. And it's at the 50 area, right? So I'm like, okay, let me go into it and see if there's anything that, you know, would make me take a sell using Confluences. The best way to do this, I'm gonna just show you the last 3 trades I've taken. So the first one was on EU, right? It was a buy, a 1 hour buy. The way I do this, I do normal technical analysis on the bigger charts. This is the weekly chart, by the way. So obviously, you know, we had a downtrend, it broke, and now we're in an uptrend, right? So this last week, I already had this here. It is a trend line, right? So on the daily chart, I saw that there was, you know, uptrend here, and it bounced off of this trend line. So I'm like, okay, so it's going to be bullish for at least, you know, a certain amount of time. So let me look at the smaller time frames to see if I can catch any hidden divergence buys, right? Because we're looking at the higher time frames to tell us whether we want to be buying or selling. So I was looking in the 4 hour. The first thing I was looking at, price at this point, price was like right here. It bounced off of this weekly trend line. It was over here, and I went down to the 1 hour. At this point, price was here. So I saw that it bounced here on the weekly trend line. It created a resistance that I kept rejecting. It finally broke through it, right? And, you know, just normal structure. It was around here. It came down. I'm like, all right, so it's like a normal retest, right? But check this out. It pushed up here, right? And then it came back down to the 50 SMA. Now you're probably asking, why didn't I pay attention to this 50 SMA touch right here? Because there's no hidden divergence, right? We want opposite directions, right? We take the low, go to this low, and go to the TDI. We see that it's the same thing. It's just a higher low. There's nothing there. There's nothing there for me that interests me. But if you move on to literally the next 50 SMA touch. All right, so on the bullish hidden divergence, we have the Pac-Man mouth. Right here, mouth is open. You have a higher low. And we only use clear lows and highs. This is a clear retracement, bounce back up. So we take a look at this. It's a Pac-Man mouth, right? Bullish. And it's paired with a 50 SMA touch. Now this has my interest, right? So I'm going to look into this and see if there's any other confluence that I have. The possible confluences, you might want to write this down here. The possible confluences that I use are the hidden divergence, number 1, right? 50 SMA touch, number 2. Those are the 2 things that catch my interest to check for other confluences. And the rest are simply fib levels, support and resistance lines, or trend lines, right? That's all. So I have the bullish hidden divergence, the 50 SMA touch. Those are 2 confluences. Now I'm looking for anything else. Obviously, we already have written here that this is a major break of resistance, and we're just retesting it. We already retested it here, and we're just simply back here again. So that's 3. Now let's see if there's anything else here. Do we have any? What was the third one? It was support and resistance line. That's already covered. And we have trend lines. Let's see. Bam. This is the point of interest. Now we have bullish hidden divergence, 50 SMA, break and retest, and a trend line, all pointing bullish, right? Now, let's see if there's anything else. Take the fib. Fibs for bullish are always low to high. You're always kind of pointing in the direction you want to go. So I'll just take the most obvious low to high here. And what do you know? A perfect 382 fib. This is just screaming to buy, right? We already have all these confluences. It's with structure. You know, this keep in mind, this on the higher time frames was a bounce on the weekly trend line up, right? So we're definitely bullish here. So that was enough for me. I took the buy. I entered right when it touched the 50 SMA because of all these confluences. And I set my trading plan. I entered right here. My TP, this is how I go about it. My TP is always the order block of the last previous high. This is the last previous high. This is the order block right here. So it's just the, you know, the open of the last up candle of that high. Then I simply just do 2-to-1 risk to reward. You can do it smaller, just to get a high risk reward, but I personally like to give myself as much wiggle room as possible. Anything 2-to-1 or higher is good game for me. And I like this one because it's right below this wick right here, this low, and it's right below the 50 fib level. So it just worked out right here, around 2-to-1 risk to reward. That was the plan. I entered here, let it go. Once it reached about halfway, once it reached about halfway here, I covered my entry. So it went up here, pushed up. Once I saw this big push up here, and retracement, I moved my stop loss up. Right now it's risk free. Pushed up, went right to TP. It was a butter trade. It was amazing. And if you notice right here on the order block, it was a crazy rejection. Imagine waiting for all this and then, you know, having that all go away. It was a perfect rejection right at the TP, which is, you know, that's all you can ever ask for, right? And that was a trade. That was a trade. Now, let me talk about this. In my trading system, this is the only other thing. When you have a trade plan like this, there's a decision whether you leave a runner or you don't leave a runner, right? I make this very simple in answering that question. Are the SMAs in line? But what I mean by that, I'm looking bullish, right? So I want the 50 on top and everything below that. Obviously, the 50 is below here. So these are not in order. I want the 50, 200, and the 800 all in line right here. So I just didn't leave a runner, right? So that was the first trade. It went to TP. It was great. Second trade, I was actually on a trip. I was on a plane leaving to Aruba last week, which is nice for vacation. But I was on here, right? AU, a friend pointed this chart out. I checked it out. I went to the weekly, see what's going on. Obviously, in a uptrend, that's really all I'm looking for. I'm like, okay, we're obviously in an uptrend here. Let's see what's going on. But we had, let me delete all this. We obviously had some failed. It failed to break highs, so it's obviously being bearish at this point in the smaller time frame. So we look at the daily. We had this M. It failed to break highs and it broke, right? So I had this marked out. A massive break of structure on the daily, right? This was all last week, so we were like around here at this point. So okay, I see this. It broke. I'm letting it retest these days. This is daily chart, so I was looking at this for about a week or so. I'm just waiting. Then I went to the 4-hour chart. So now we're getting to the retest zone, and now we have a 50 SMA coming down here, right? So at this point, I'm like, all right, so we have, you know, this is a point of interest. Let me see if there's hidden divergence, right? Because this is the key. I need a hidden divergence and a 50 SMA touch to even be interested in the trade. So this is the area of interest, right? This is the retest. So I look down here. There you go, a lower high and a higher high. Bam. This is bearish hidden divergence. Lower high and a higher high on the TDI. All right, so now we already have 3 confluences, right? We have hidden the bearish hidden divergence, the 50 SMA touch, and a massive retest of structure here on the daily chart. So this already has my interest. Now we just see if there's anything else. Is there trend lines? Is there, you know, fib levels, blah, blah, blah. So I check the fib. I first check the very main high to low. Remember, we're going high to low because we're bearish. So it's either high all the way down to the low, drag it over, and bam. Right on the 382, just like the last trade, right? You can see that this is very repetitive. That's what I like about this. It's the same thing over and over again. So high to low, we have the fib level, break of structure and retest, hidden divergence, 50 SMA. That's 4 confluences. And that is enough for me to take this trade. So I did it again, right? Let me bring this here. Set up my entry again is right on the 50 SMA when it touches, if all the confluences are in line, which in this case it was. Again, target, this is what I find my target first. So it's the order block of the last low, of the last main low, which was right here. I could have easily done it right here as well. This is the main low, but I like to be safe. I tend to lean on the more safe side. So I'm like, I mean, it's right here. It's not that far away anyways. So this is why I chose my target. So what I did, it's the same thing as last trade. I used the order block as a TP, and then I needed 2-to-1 risk reward. Right, the 2-to-1 gives us all this space. Me personally, I didn't think we needed all this space because this is way above this huge daily zone, right? So I put my stop above the daily zone. Now, granted, this was insanely close to stopping me out. Like at this point in the trade, I accepted that I was going to be stopped out. I mean, but to be honest, before, like any trade that I enter, I'm okay with me being stopped out. Like I just expect it. Like it's either or. It's probability, right? So it's not really a big surprise. When it was all the way up here, I was like, okay, I'll probably get stopped out. But I didn't. It went down here, right? And I want to mention this little key. Before entering the trade, I always have a point that I decide before I take the trade that I'm going to move my entry, my stop loss to break even, sorry. So at this point, that point was this one. Why did I pick that? I mean, the structure here, price is really reacting off of it a lot. So it just made sense, right? So I entered the trade. I almost got stopped out. I'm like in the middle of a vacation right now. So it was a 4-hour chart. I wasn't really looking at it that much. It went down here. I saw that it went to this area. Right when it went to this area, I moved this up. Done. Risk-free, right? And I kept on going down. At this point, I remember this specifically. I was laying in bed in Aruba, and I was like, okay, it went down here. It's not close to the, like it didn't hit the automatic TP right here. You can tell it's a little bit above that. But at that point, I didn't want to worry about any trade or like have it in my mind because I just want to like chill, relax on vacation. So I took profits here actually. If I waited, I would have got the extra paper too. It doesn't really matter. But in this case, let's check it out, right? Remember what I said? If we leave runners or not, if the SMAs are in order. In this case, we're bearish, so we're looking 50 to be on the bottom. So 50, 200, 800, they are in order, right? So I'm leaving a runner in this case. I leave like a 10% runner, nothing crazy, very small. TP for the runner is the negative 0.272. This is the TP for that, right? This here. Obviously, this trade did not go to the TP. I would have been stopped out in profit right here or above this high because this, while price is moving down, I'm moving the stop loss lower and lower just to cover profit, right? So I would have been stopped out either here or here, right? Depending on where that put that stop loss. And that's that. That's the trade. Went almost to break. I'm sorry, almost stop loss. I just stuck to the plan. Nothing changed, and then it went to profit.
Okay, Tyler, thank you so much for, showing us your personal strategy. I wrote down a couple questions that I think people might have. And the first thing, just so that everybody's clear, when you are looking for your confluences, what is the minimum amount of confluences you need to get into your trade setup?
You want 3+ with structure. I want to make that clear though, with structure. Before I used to do this with 3 confluences, period. Like if I have 3 confluences, I enter, doesn't matter. Now I'm being a bit more picky. I need it to be with structure. By structure, I mean simple things like this: break and retest. Just literally that. If you notice, all 3 trades I took had this. The EU 1-hour trades, every single one had 3 confluences with structure. Remember this? Break, retest, and that was the entry. Break, retest, that was the entry. Odd USD on the 4-hour or the daily. Break, retest, that was the entry. So 3 confluences with structure.
Okay, perfect. So I also had another question. Now, when you're choosing your time frames to look for the hidden divergence, we all know that the higher time frames tend to be stronger, but how can you know when you're on the 30-minute or the 1-hour or the 4-hour if you have enough reason to believe that that's the best time frame to frame your entry off of or your trade idea off of?
Well, I let the 50 SMA tell me what time frame I need to be looking at, right? Me personally, so just say this off the bat, this works. There's hidden divergence on the 1 minute and there's hidden divergence on the weekly, right? It happens everywhere. I think on the weekly on EU, there was one. Yeah, the one when I started off, it happens in every time frame. This is the hidden divergence right here. It happens on every time frame, but I tend to lean towards the higher time frames just because they have more strength, right? So me personally, I take trades on the 30-minute, the 1-hour, and the 4-hour. Those are the 3 time frames I look at. 15-minute, 5-minute, and 1 minute are valid, but it's a bit easier to to be with the trend when you know what's going on overall and you're trading with the overall trend. When you're trading with the daily, when you're trading with the weekly, you have more strength behind you to back you up. That's just how I see it.
Okay. I also have another question, a couple more questions. The third question I wanted to ask is, in your trading plan, is there specific times where you trade hidden divergence, or do you trade whenever hidden divergence shows up?
Well, I personally trade it whenever it shows up. I know that in the way you trade it and the different people in the group, it's always a specific time frame that you guys do. In this case, I don't look at that. I just look at where it is on the price. This is the setup. I don't really care what time this is because all the confluences are there, and that's just where it is, right? But I will say that there are certain time frames where this setup happens more often than not. You'll see this on London. You'll see this on New York, on the high volume trades, whatever. Because it is true, when you're trading at 8 p.m., there's not going to be as much going on as 9:30 a.m., right? Eastern Standard Time.
Definitely.
But that being said, I just trade it whenever the setup appears,
Okay.
like a robot.
Now, the other two questions I wanted to ask are more technical questions involving the indicators you're using. So, can we see your setup for the TDI? What are we looking at on the TDI? Is there specific settings as well as the moving averages that we need to know about?
Yeah. So the main thing for the TDI, you see there's a lot of lines here. It might be confusing or not. But for this purpose of using the hidden divergence and stuff like that, all I'm looking for, or all I'm looking at, is this black line here. This is the RSI within the TDI, right? So if we go to settings, take this off, take this off, take this off. This is all we're looking at, this black line. The other Bollinger Bands is something I use for a separate thing. It's called shark fins. I don't have to get too much into that, but just real quick, just so I can throw it out there. When you have, I use this as a little a separate confluences just to have in the back of my mind. You see how this is the entry for the bullish hidden divergence off the 50 SMA with structure and blah, 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 all this confluences.
Yeah.
When the RSI is outside of the Bollinger Bands right here, it means that it's out of range, like it's a bit oversold, right? So I just use that. We call that shark fins, right? It makes a little shark fin here. See that? Like, let's pretend the whole thing is the ocean. The shark fin pops out. I just use that on the back of my head, right? Okay, like, okay, this is another sign that it might be, a bit oversold and it might bounce back up. That's all I use it for. But the main thing is the RSI, this black line that we use to find these hidden divergence trades off of.
Right. And the red line in the middle is moving average.
Red line, it really doesn't mean anything. I just had that there, just to know where I'm at.
Oh, it's the middle of the bands. Okay. And
Yeah,
what are your EMA markers? You said you have a 50 in there. What else do you have?
Yeah. I remember in the beginning of this session, I specifically mentioned that it was EMAs. I
EMA.
take that back. It was actually SMAs. That was a slip of the tongue there. These
Okay.
are all SMAs. These are all SMAs. So 50, 200, and 800. So if we go to the settings here, that was my mistake. It was all SMAs.
Is there a particular difference between the SMA and the EMA for you in your strategy?
Definitely. Because I actually traded with EMAs most of, I guess you could say, my trading career. It was all EMAs. But once I switched over to SMAs, I saw a lot more things line up. I saw that price respected the SMAs a bit more in terms of the main moves, the bigger moves, right? I mean, this is the weekly chart, right? I mean, the price, if it was an EMA, it would probably be a bit higher here, and then price went below the EMA and bounced up. But since it's the SMA, it respected it perfectly. Like look at that, like almost zero drawdown on this. Because remember, our entries are in the 50 SMA. So I just use the 50 SMA because I just found that price respects it more for the bigger moves, which is what we're looking for.
Right. Okay. And this is the last question. This is a question for traders who are up and coming and are probably looking at 100 strategies. If somebody were to take your strategy and you were them starting from the beginning, what are the most important things to remind yourself of, whether you're winning or losing, using the strategy? Like, what level of consistency does somebody need to have in order to find themselves using the strategy correctly?
Okay, that's actually a great question. The reason I love this strategy is because it's more or less black and white, right? When you have three confluences plus structure, you take the trade, period, right? There's rules for everything, right? So there's less room for, oh, is this might be it, this might not be it. It's very clear. Is it at a fib level? Is it touching the 50 SMA? Is there a hidden divergence? They're all yes or no questions, so it makes it black and white and helpful for that. What I found in the beginning is that I used to take hidden divergence trades, period. Like the confluences were all over the place. There wasn't really that many things lining up. But I saw the 50 SMA touch and I was like, okay, that's cool. Let me just enter here. And that didn't work out. What I love about this is that there's three confluences with price structure. That's it. Once that's present, it's beautiful. All three trades that I showed you today were the last three trades that I've taken. And they're all, I call them butter trades because it's very, very obvious if you look at it, right? I don't want to say like, I don't want to say that as something like, oh yeah, it's obvious. You can obviously see it. But once you do technical analysis, it's a simple thing, right? If you go to the daily chart, it's I like things to be very obvious when I trade. This is an obvious place, a zone where price, bounced off and rejected. So more than likely, when it comes to this area, it'll show some type of reaction to it, right? It's very clear. I like everything to be very clear. The fib level, right? I want the fib level to be very clear. I go to the high, I go to the low, and this fib level 382 is exactly where the 50 SMA is, which is exactly where the hidden divergence is, which is exactly where I want to enter, right? It's, like I enter because the fib level is right on it. I don't want this fib level to be like up here and I'm entering. This is not a confluence if the fib level is right here. I want it to be where I'm entering, which it was, right here, to the T. This is exactly where I entered, the 50 SMA, and that's the fib level, that's the zone. Everything needs to be clear. So that's what I would recommend. Don't be chasing the trade. Let the trade come to you. If it's not cleared, I don't take it. That's it.
Perfect. Well, Tyler, we want to thank you so much for coming out here. We got Tyler Bonilla here sharing his personal strategy that's proven profitability. I mean, the guy's been trading for a while and he knows what works and doesn't work. So I hope you guys found value from this live session. We'll be doing more of those. And please, if you get a chance, don't forget to head over to the Good Eats FX YouTube channel and subscribe, comment, and of course, like the videos. We got more of this stuff coming. We'll catch you guys next time.